Your money is at risk. If the Fed cuts rates, stocks could skyrocket. If they don't, the economy could crash. Which one is coming? The answer might shock you. Stay with me because this could change everything. Let's dive in. The Fed is under pressure, and its next move could shake up the entire economy. Will they cut interest rates in 2025, or will high rates continue to weigh on the economy? Markets are eagerly anticipating a rate cut, but the latest inflation data suggests the Fed might not be ready to pull the trigger just yet. The most recent CPI report showed inflation rising faster than expected, raising concerns that the Fed might have to maintain higher rates longer to curb another inflation surge. So, what does this mean for you? The Federal Reserve's goal is simple: keep inflation at 2% while maintaining economic stability. Interest rates are its most powerful tool to control inflation, employment, and financial markets. When rates go up, inflation slows, but so does the economy. When rates go down, growth picks up, but inflation risks rising again. Over the past 2 years, the Fed has raised interest rates 11 times, bringing the benchmark rate to its current range of 4.25% to 4.50%, the highest in over 2 decades. Mortgage rates have soared past 7%, making homeownership more challenging. Inflation has cooled significantly, dropping from a peak of 9.1% in June 2022. But recent data shows inflation accelerating again in January 2025, raising concerns about its persistence. So, does this mean rate cuts are finally on the horizon? The Federal Reserve has a history of getting interest rate decisions wrong, sometimes cutting too soon, and sometimes holding rates too high for too long. In the 1970s, the Fed lowered rates too early, thinking inflation was under control. The result? Inflation surged above 10%, forcing the Fed to slam on the brakes with aggressive rate hikes, which ultimately led to a deep recession. Fast forward to the 1990s, and the Fed made the opposite mistake. They kept interest rates high for too long, trying to prevent overheating, but eventually had to cut aggressively when economic growth stalled, leading to a mild recession. This raises the big question: could the Fed be about to repeat history in 2025? Will they cut too soon and risk another inflation spike? Or will they wait too long and drag the economy into a downturn? Let me know what you think in the comments. Inflation is cooling, and the labor market is softening, but experts remain divided on what happens next. The bond market is already signaling expectations for lower rates. According to the CME FedWatch tool, there is a 34.8% probability of a rate cut by June 2025. Goldman Sachs suggests that Fed policy in 2025 may stay within a narrow range unless there is a significant change in inflation, while JP Morgan remains skeptical, warning that the market may be expecting cuts too soon and that the Fed could hold steady until the fourth quarter. BlackRock predicts that upcoming rate cuts will not be as deep as market expectations, given the economy's resilience and persistent inflationary pressures. With these conflicting opinions, the big question is, who should you believe? Are markets overreacting, or is the Fed actually closer to cutting rates than Powell wants to admit? Powell has stated that the Fed is in no rush to cut rates and will need to see further progress in reducing inflation before considering adjustments. If the Fed does cut rates, some industries will benefit more than others. The tech sector, particularly AI stocks like Nvidia, Microsoft, and Google, could see massive gains as borrowing costs decrease and investor sentiment improves. The crypto market may also experience a surge, with Bitcoin potentially crossing $100,000 as lower interest rates drive more money into speculative assets. Meanwhile, the energy sector could be impacted in different ways. If lower rates boost economic growth, oil demand may increase. But if rates stay high, we could see oil prices stabilize or even decline. The housing market would likely rebound as mortgage rates drop, making home buying more affordable. But what about businesses? Small companies that rely on loans to fund expansion and payroll may finally see some relief. But if rates stay high for too long, they could be forced to cut costs, slow hiring, or even downsize. Which of these industries do you think will benefit the most? Let me know your thoughts in the comments. So, What are the possible outcomes for 2025? In the best-case scenario, the Fed successfully tames inflation without triggering a recession. They cut rates gradually, maybe 3 times throughout the year, and the economy continues to grow steadily. Stocks rally, the housing market recovers, and investor confidence strengthens. In the worst-case scenario, inflation proves more stubborn than expected. Instead of cutting rates, the Fed could be forced to hold steady, or even hike again, to keep inflation from spiraling back out of control. This could lead to market turmoil, a slowdown in consumer spending, and potentially even a recession. The baseline scenario? The Fed holds rates steady for most of 2025, cautious about inflationary risks exacerbated by recent tariff policies and global economic uncertainty. That could mean extended market turbulence, unpredictable stock movements, and a slowdown in business investment. Which scenario do you see playing out? Let's break it down in the comments. If the Fed does cut rates, expect tech stocks and AI companies to surge, along with a potential rebound in the housing market. If rates stay where they are, dividend stocks and bonds may be a safer bet. And if the Fed raises rates again, cash and short-term bonds will likely provide the best returns, while risk assets like tech stocks and crypto could take a hit. Regardless of the outcome, staying informed will help you make smarter financial moves. Are you positioning your investments for rate cuts, or do you think rates will stay high for longer? Let me know in the comments. So, is the long-awaited Fed rate cut coming in 2025, or will Powell keep interest rates high for longer? The market expects it, but inflation is still unpredictable. What do you think? Will Powell stand firm, or is a rate cut closer than we think? Let's discuss in the comments. If you want to stay ahead of market trends and make informed investment decisions, subscribe to Cashkeys and turn on notifications so you never miss an update. See you in the next video.